Comcast posted higher fourth quarter revenue on Tuesday, adding new pay TV and internet subscribers as the FCC's vote on net neutrality looms. I'm joined by Tuna Amobi, Senior Equity Analyst at S&P Capital IQ. Tuna, Comcast Chairman and CEO Brian Roberts said the company is looking forward to receiving regulatory approval for the Time Warner Cable merger. But as we await the FCC's net neutrality vote on Thursday, after which consideration of the deal is expected to intensify, how likely do you believe it is that this deal could be struck down?
Well, I think it's become increasingly dicey that the deal would close on schedule, which is the company's talked about end of the first quarter. I think what the vote does is to create a new layer of uncertainty as to what potential conditions the FCC might impose on the deal. We still believe the deal has a chance of closing, albeit perhaps with more onerous conditions and potentially more hurdles ahead.
So if the deal is not allowed to go through, how tough of a position would you say Comcast will be in when you consider that growth in its pay TV side is slowing, and that would certainly keep it from being able to create fast lanes and other ways of extracting more money on the broadband side?
Well, I think this is the pay TV industry is mature. Comcast right now is being valued, I think, with an expectation that there is a premium to be realized from this transaction. But if in fact, hypothetically, the deal falls through, I would argue that you're likely to see some kind of correction in the shares. I think increased focus on fundamentals is likely to bring down the valuation multiple from about 8.8 times currently for the shares. So I think net-net, I would say a lot of investors still expect the deal to close, but the worry is what type of conditions and what type of concessions the company might be forced to make.
What sort of concessions would the companies have to make to satisfy antitrust laws?
Well, it could be forced with some, divestitures. They could be subject to perhaps some type of extended, I wouldn't expect some kind of price restrictions, but it could, in fact, we saw the NBC deal. There were some concessions related to online video programming access, things of that nature. That could, in fact, somewhat devalue the attractiveness of the transaction. But given the scale that we're talking about here, we don't think that those are going to be, kind of deterrents for the company to move forward.
All right. And in the meantime, overall, what did you think of Comcast's latest results? What's your opinion on its shares?
Well, I think we reiterated our buy recommendation, actually upped our 12-month target price by $5 to $65. We still think that the deal has a fair chance of closing. The Q4 results themselves, we had mixed takeaways. The bright spots were high-speed data and business services at the residential cable division. Also, the theme parks and the broadcast networks at NBC continued to outperform. The main weakness we saw is the cable networks division, where there seems to be some issues with ratings and advertising slowdown. But then again, those are sort of industry-wide concerns.
All right, thank you so much, Tuna Amobi, Senior Equity Analyst at S&P Capital IQ.
Thanks for having me.
And I'm Brittany Umar for The Street.